Hello and welcome to another Financial Friday. Today we are looking at the question, why have mortgage rates rebounded? Since the Fed cut rates in mid-September, average 30-year mortgage rates have actually moved up from 6.11 to 6.92%. Why? That's the question everyone is asking, and nobody really knows the answer. ListReports, dated October 2024, have put together some sensible responses. Here are the four most sensible responses, which in some combination could help to explain the big move. First, we say this is typical post-Fed rate cut moves. As strange as it might sound, it's actually fairly common for Treasury bond prices to fall and mortgage rates to rise immediately after the Fed initiates a rate cut cycle. It's a buy on rumor, sell on fact phenomenon. In this case, the market had already priced in multiple large rate cuts before year end. Second, unsupportive data since the Fed cut. The September BLS jobs report that came out on 10/4 was a blowout. Positive 254,000 jobs, unemployment rate 4.2 from 4.1, and then the latest inflation report saw core CPI rise from 3.2% year over year in August to 3.3% year over year in September. Would the Fed have cut rates 50 BPS if they knew this report was coming? Third, the October effect. Historically, October has been a bad month for financial markets. The 1929 stock market crash and Black Monday in 1987 both happened in October. And in each of the last 3 years, bond prices have gotten hit hard in October. Recall that just last year, October 2023, average 30-year mortgage rates peaked at 8.07%. Fourth, election-related fears. Who will increase the annual deficit and federal debt the most? Sadly, advocating for a balanced budget renders one unelectable. Would a Trump victory stoke inflation, or a Harris win push our national debt even higher? It's tough in this business. Once you think it's going one way, it goes another. That's what a chief strategy officer at a major lender had to say in a newspaper article earlier this week. We are just starting to see signs of resurgent demand, pending sales rising year over year, and then October got cruel. So what do we have to look forward to? November 7th, there's another meeting. Right now, it says there's a 93% probability of a 25 BPS cut. Then, at the December 18th meeting, a 70% probability that rates will be 50 BPS below current levels. And then, of course, a January 29th meeting with a 48% probability that rates will be 75 BPS below current levels. So, what do we know? The future is unknown, and things happen and we can't always explain them. But what I can tell you is that homes are entering the market. Lenders are working very hard to get people approved for a loan. If rates do go down, there's always a possibility that you can refinance. And right now, people are offering under list and getting under contract. There are still some multiple offer situations, but this truly is time that a buyer can work with a seller and hopefully come up with a win-win. If you have any questions or would like to check out some homes, please give me a call. Have a great weekend.